Okay, good afternoon, or going to be good morning. Today this crowd looks very serious, which make me very nervous. Before we get going, actually I know, because talking about exchange rate, it's a very typical issue for Singaporeans. We go travel and we always say, wow, so cheap, so cheap. Every time you hear that, you know it's a Singaporean. But that is because of our strong Sing dollars. So before I get going, maybe since this is SG50, right, we take a bit of memory lane. And since you all are so serious, maybe you are still waiting for lucky draw. Maybe I can give something first. Can see now. Can anyone tell me, Singapore got independence in 1965, right? When did we print our own currency? Actually, I was asking for the date, but never mind. Just give me the year, can really. Anyone want to try? $1964, no, that's not right. But really, thank you for trying. 65, no, we got independent in 1965. 67, you are right, sir. It's actually on 7 April 1967. Can I offer you one of this? Okay, actually it looks like $100 red packet. However, inside got Toto ticket that can win you $1 million. Okay, maybe sir, later I pass it to you, yeah. So I have a few more. Okay, so that was when we first printed our currency, 1967. Although we got independence in 1965. So when we first printed our currency, we actually have a currency interchangeability agreement with both Malaysia and Brunei. If you still recall, today if you're holding on Brunei dollar notes, you can use it in Singapore. But Malaysia, unfortunately, you can't. So when did Malaysia decide to break away from this currency interchangeability agreement? Yes, sir. 1973, you are right, sir. Okay, so we have one for you also. So Monday, if any one of you win anything, please let me know. Yeah. No, I'm not asking for any commissions. So this is where actually if you look at it, I don't know. I feel very proud to be Singaporeans. I mean, because of our government's prudent policies, today we can basically go to any countries that we like, and we can enjoy huge purchasing power. Which is why there are a lot of Malaysia developers, Philippines, many countries that come to Singapore that sell their property to us because they say that it's cheap. On the other hand, a strong dollar also means it's a double-edged sword. You buy cheap today, would it be cheaper tomorrow? The property price may appreciate, but our Sing dollar, would it continue to appreciate? Okay, so today, because of time constraints, I will want to focus on what is the basis of Sing dollars and what is our potential strength. Right? And then, of course, what are the decisions you can make and what are the strategies? And in fact, today's sessions is very timely because I think a lot of people are out there trying to understand what happened to the Chinese renminbi. Because if you have been following the stock market, it's Chinese what we call 惨不忍睹, cannot see. And if you have been in those markets, I'm very sure you are very concerned. Okay, so we will also try to address part of it, right? Of course, due to the time constraint. Now, what do you think? Why Sing dollar can be so strong? Have you ever thought about it? Actually, most Singaporeans don't really bother on currency. We are very privileged because why? We earn Sing dollars, and unless you are in the export, import, you are in the trading business, you really hardly follow. Unlike the Malaysians, the Indonesians, okay, especially my those clients, friends, on their phone, they will always monitor what is their exchange rate. And of course, most recently, Malaysian always tell me, say, every day wake up, my wealth string again. Because ringgit has been weakening. Okay, so the question here is, why do you think Sing dollars has strengthened so much? So back in 1967, 1 Sing to 1 ringgit is 1 to 1. Today, about 3 ringgit. Actually, every time you just walk past any money changer, you see a long queue. That means it's time to change ringgit also. So the reason why Sing dollars appreciate against most currencies is because Singapore, we practice what? Using currencies to combat inflation. Now, a lot of countries in the world, they use interest rate. For example, China, for example, US, for example, Europe. So if let's say they find that inflation is rising, what happens is that they will try to increase the interest rate. Then if they want to boost their economy, they will lower their interest rate. But for Singapore, we are such a small country, everything that we consume comes from import. So therefore, it will make sense for us to have a strong Sing dollar. So when our Sing dollar is strong, the import coming in will be cheap. Right? Have you thought about it? Because all the rice we eat are from import. Even the water that we use are from import. Okay, some people may argue, okay, then you say import is cheap. Then how about export? Singapore rely a lot on export. But that is where even all the ingredients for our export come from import. So therefore, if let's say the import are cheap, in the sense our raw material, our costs are also cheaper. Okay, but more importantly, Singapore need to progress to the next level, meaning to say we cannot continue to do those cheap kind of stuff. We have to do value-added stuff. And of course, through the government prudent policies, they have been able to accumulate reserve. No, it's not that Singapore say, I want to make Sing dollar strong. We can. No. You must have muscle. You must have the reserve. And that's where we are actually able to do so. I mean, sounded a bit like election rally. No, I mean, I'm just talking about the facts here. So let's look at the chart for US and Sing dollars. Since 1990, Sing dollars has appreciated by 36%. US, the world's largest economy, where everyone uses US dollars for trading, and they are weakened against Sing dollars. For those of you who are sending your children to study in US, you will find that it's now more affordable. 10, 20 years ago, going to US is a big thing. But now, because of the cheap tickets and our strong Sing dollars, it becomes a very easy thing to do. But I also noticed, since a few years ago, my wife started to monitor exchange rate very closely, especially euro. Actually, I didn't realize, no, because she was telling me, say, hey, euro now very weak. I said, yeah, it's quite bad. That was a few years ago. So she kept repeating this for a few times. I mean, of course, job hazard. I just tell her why. Then she said, finally, she see I cannot get the hint, right? Then she said, okay, since euro so weak, right, can we go Paris? But then I tell her, I say, no, you know why? Not time to go yet. It will become weaker. I'm trying to buy time. Then she say, no, she looked at me point blank. No, it's like I'm just said something very stupid. No, weaker, then we go again. So now she talk about Japan. No, honestly, I have to go Europe for a few times already. But it's true lah. I mean, the bags there are cheaper. But of course, I always try to reason with her. If we don't go, it's even cheaper. No? That means I don't have to spend anything. Okay, so you see Japanese yen, 48%. Right, so can you see how powerful is Sing dollars? And that is why, because of this government policy, Sing dollar over a long period of time, I say a long period of times, will always strengthen. And as long as our governments are very prudent in managing this reserve, that means they are able to adopt prudent policies and continue to collect our reserve, they would have the bullets to ensure our Sing dollars stay strong. Okay, let's look at Indonesia. Why do you think Indonesians like to come to Singapore to buy properties? Especially our property here are so expensive. In fact, not only Indonesians, Malaysians. What I mean, actually, I learned a lot from Ryan's slides. So you can see the Malaysia properties, if compared to Singapore, is actually very, very cheap. But why is it that Malaysians, Indonesians, if you look at the last 10, 20 years chart, the top foreign buyers of Singapore properties, other than the last few years where the Chinese overtaken, it has always been Malaysian and Indonesians. So why is it that our property is so expensive, they are still coming to buy? Okay, can anyone tell me now? Back in 1996, one Sing dollar can change for how much rupiah? 1,000, no. 2,000, no. 4,000, no. 10,000 also wrong. I'm not even looking for the exact number. Just give me a ballpark. 8,000, no. Okay, my friend, at the rate that we are going, we should get the right answer one. Okay, but one thing for sure. Over here today, all the Singapore men, very good. Never go Batam. No, this one trick question. Because only if you go Batam very often, then you know the rate. For me, I go Jakarta. Okay, so let me show you. Back in 1996, one Sing dollar can change 1,600 rupiah. Today, your Indonesian mate are very excited. Because why? Now one Sing can change 9,008 rupiah. How much has that been? 510% appreciation. That is why Indonesians they are very excited to come here to park their money to buy properties here. Even if our property price do not increase, just on the appreciation on currency, 500%. Or you can even put it in another way. If they don't put their money here, their money will devalue. So let's look at Malaysia. Okay, Malaysia, of course, we all know, from 1 to 1 to now 1 to 3. But let's look at since 1990, the dollars has appreciated by 100%. So which means to say, if you have bought a property back then in ringgit, now the property price may have gone up. What are the impact to your investment? Okay, I think this one I can only have time to just barely run through. For the exchange rate, it's not just about for property, it's also for the stocks investment. So over here, I pick up 2 time frame. And this chart also can illustrate to show you that Sing dollars, yes, over long run, it does strengthen. However, you must look at the economic cycle. All right, it's not that Sing dollars is on the way every year or go out one. There is always up and down. So you must know when is the cycle. But this is where investors like you are interested to find out where are the cycle we are at now. So look at this. This is talking about London stock market. So in 1996 to 2003, Sing dollars and British pound, right, about 28%. That means to say, pound appreciated, but the London stock market depreciated. Then we pick another period where pound depreciated against us, and then the stock market actually went up. So what are the net effect for a property investors? Okay, so this is basically formula, but what you can actually see from here is that even though the stock market went down, but because our currency depreciated against pound, you still make money by investing in London stock market. But when London stock market goes up, but the currency depreciated, your returns diluted. Right? So that is why when you are investing in the overseas stock markets, you have to factor in the currencies. And it's a double-edged sword, meaning to say if you enter into a market and the market goes up and the currency also to your favor, you make a lot of money. And this is what the Indonesians and Malaysians has experienced from investing in Singapore property. Okay, let's look at the property market impact now. Australia. Now, Australia is another very popular place for Singaporeans to invest. And if you have invested in the right cycle, in the right place, from 2001 to 2011, Australia property market actually went up by 100%. And at that time, Aussie dollar also appreciated against Sing. You still remember 1 to 1, about 1 to 1, then went to 130 something. And one of the reasons why Australia went up is because of China. Because at that time, China was demanding a lot of resources from Australia. And Australia is full of resources, coal, stuff like that. So therefore, the Aussie dollars appreciated a lot. So let's look at what is the impact. So from here, the housing index went up by 134% over 10 years, which actually is also a very good rate of growth. But of course, Australian properties market overall, in general, every year appreciate about 5-6%. But that is also a very different period of time where there's a lot of demand for Australia because of China demand. Then Aussie dollars also went up against Sing dollars. And therefore, the total growth is 228%. But that's not all, yeah? That's not all. You buy property, you take leverage. So therefore, you put down only 30%. You take a 70% financing. And your total return on capital, 700%. This is really amazing, no? So for those of you who are so lucky that your children are at that period of time studying in Australia and you no choice go and buy, not that you know so well, okay, very lucky for you. You are just very blessed. And I'm not even factoring installments, taxes, whatever. I'm assuming that your rental of your properties can service your installment and enough to pay tax. So the return on equity is 760%. So is it the right time now to buy Australian properties? Okay, maybe if we have time, we talk a bit about that. Now the whole chart here is not to talk about properties, right? Because I'm not a property expert. But what we are talking about is the impact of currencies for your financial investment. So let's look at Malaysia. Now Malaysia, again, I'm using a general housing price index. So it went up by 53%. Okay, I'm sure Ryan will correct that depending on which state we are talking about. Of course, ringgit went down. So overall, the housing price index went up by 29%, factoring the Sing dollars exchange rate. So although the return on capital is supposed to be 176%, because again, you put down 30% financing, at 30% down payment, 70% financing, and the return on capital is only 95%. So the currency impact actually have a great impact on your returns. But in this situation, it is still positive. It is still positive. Okay, so I think a lot of people question here is, will ringgit continue to weaken? I mean, my view is that ringgit probably still is still in a weakening trend, but do not discount ringgit. Because not forgetting, Malaysia is a country full of resources. And some of the major issue that causes the ringgit to weaken, first is actually oil price. Oil price has come down from 111 US dollars to about 40 over US dollars. So it impacts Malaysia a lot. Second, of course, some of the political scandals that is now appearing. So it affected a lot of confidence. And of course, the palm oil prices, because of the commodity prices, it has also weakened. But can we assume that oil price will always stay at this level? What if everything turn around? And not forgetting, Malaysia has introduced GST. Now, GST is not a good thing, but it helps the governments to increase what? Their reserve. I mean, provided the GST go to the right account. You all don't like that. I still want to go Malaysia one. Okay, but no, honestly, you think about it. So if everything turns around, right, ringgit may actually recover back to one Sing about 260, 280 ringgit. So if you can catch the trend, provided you can catch the trend, and I want to put on a very big disclaimer. Whatever you see here is all from hindsight one. From hindsight, I can plot the chart to show you the maximum effect. But when you are in it, it's not easy. It's not easy. Because why? You must be able to see the trend, go look at the future. And that is where a lot of things is difficult to catch. Okay, but let's look at going forward. Because as investors, what has passed has passed. You take it as a history lesson. But what you want to know is going forward, what happens. Now, Europe and Japan continue their QE, meaning to say they are printing more money. Printing more money at a low interest, and in fact, for ECB, they even have some segment where they have negative interest rate. Yes, that means to say, the central bank actually charge a bank for putting money with central banks charging them money for putting money with them. So instead of paying interest, they charge them money. So it's what we call a negative interest rate environment. So therefore, Euro, Japanese yen will continue to weaken. Because these two regions are trying to use the low currencies to boost their export, to boost back their economy. Chinese, okay, renminbi, of course, over the last 2 weeks has triggered a lot of things. And in fact, they are now being put as the culprit for the last 1 week plus of market capitulations. You can see Dow Jones dropped by more than 1,000 points. Right? It has caused a lot of tremor. So what actually happens? Now, some say Chinese renminbi, they devalue is because their economy is very bad, so they need to devalue their currencies to make their things more competitive. Some say that because they are preparing to become the IMF, right, the SDR, special drawing rights, so they want to be a more international currency. Right? Some say that because they are expecting US to increase the interest rate. Okay, I know whatever they say, one thing for sure, I know I have no say. So since I have no say, then what do I bother about what they say? No, not true. Because we need to see the general directions. Because we are all layman investors. We cannot influence the world. And of course, the central banks, they will have other things to factor about. But what we can try to do is to try to see the trend. Now, of course, personally, I do not think that China is trying to start a currency war. Because if you look back, Asian financial crisis, when all the Asian currencies devalued drastically, Chinese renminbi, they maintained. And then the last round was Lehman Brothers crisis. Let me jump the chart a bit, because if you look at this chart here, actually renminbi has appreciated on Sing dollars. And you know Sing dollars is a strong currency, and it has appreciated with all major currency, but renminbi, 28%. So for them to make some adjustment, and I truly think it's because they want to look at the macro environments. US is going to increase interest rate. It's just a matter of time. So they need to take preemptive move. But let's look at the impact. The impact here for property investors is the rise in interest rate. Today, 3-month SIBOR is about how many percent already? 1%. So 1% plus the spread that they charge on you, you are easily paying an interest rate of 2%. For those of us who have commercial properties, okay, you will probably have received letter from the banks informing you that now your interest rate is 4.5 to 4.8%. So interest rate has risen. So this one is something that is a headwind for any form of property investment. But because of US dollars going to increase their interest rate, so there is a general trend, US dollars will strengthen. Okay, so a summary. US currencies is going to strengthen against Sing dollars, right, against major currencies. Euro, Japanese yen continue to weaken. So when you are thinking of buying foreign properties, where should you focus on from a currency consideration point of view? So as an investors now, there's a lot of things we need to factor in. Before we even say, okay, this market is good, then what are the economic environments? What are the macro factors? But for Singapore investors, one thing for sure, Sing dollars is important. We need to factor that. Right, so next time while you're doing your travel planning, because nowadays we actually decide where to go, no, by looking at which currency is weaker than us. So Japan now very popular. Europe also popular. US not so. Okay, but actually the most popular will still be Malaysia. So my last few slides. So as an investors, what should you focus on? I would already say to look into your own financial profile, how much risk you can tolerate. As I mentioned earlier on, Australia dollars and ringgit is all-time low against Sing dollars. And if let's say the macro environment change, and all these things will take a few years, but that's why property is for a long period of time of investment. If let's say the environment change, Aussie dollars start to pick up, but actually you think about it, it may be true, no? Because in order for the world to pick up, China must pick up. So if China pick up, Aussie will be a direct beneficiary. And ringgit and Aussie dollars may actually appreciate. But my friend, because of the time constraint, I don't have the luxury to share with you more information for you to make any other decisions. Okay, one of the things I can share with you is that we do have a little space there. You can actually indicate your interest, what other information you want. Okay, over here, we are very glad to have this opportunity by ST Property to share something with you. But in order to make a complete investment decisions, I would really suggest you get more information. Okay, so I think like Ryan, he offers some of his information. So we also offer some of our data for you to actually consider. Then the other thing, okay, ringgit, that's what I mentioned. All right, 3 ringgit, how about to 260? Actually, even Malaysia property price don't appreciate. You will have made quite a lot from your currency gain. But ultimately, right, if you have no time, no desire to travel overseas to look for other properties, Singapore is also a good bet. Why? Because Indonesians, Malaysians, from a currency point of view, they will continue to look at here as a good place to hedge their currency. But what is stopping between them now is probably the cooling measures. Things like ABSD. But the good thing here is after 11 September, things may change quite drastically. So timing changes, so we need to factor all this. Okay, so finally, especially for those of you as you are thinking, hey, should I buy the Singapore properties? What should I do with it? Can I really also suggest you to take a look at my book, Grow Rich Singapore Style? Because I believe as a Singaporean, there's a lot of things we can take advantage of. There's another thing we haven't had the chance to discuss. The impact of the income ceiling for HDB and executive condo. Right? So some people say that this rise in impact may actually affect the private properties. But my view is that this impact, this raise in the income ceiling is government trying to benefit Singaporeans from the BTO, from the executive condo, and in a way it will actually provide support for the overall HDB markets, which will allow for the upgraders to upgrade to a private properties. So I mean, if you take a whole string through, it's really understanding what is the choices of Singaporeans. Right, so you can actually find more information in this book where you can understand where I'm coming from, the angles, and it's really meant for Singaporeans. Right? But of course, we have actually a lot of foreigners who actually got this book and say, oh, now I understand why Singapore property markets can behave in a certain way. But of course, it's not a book on property, but it's really a book about financial planning and financial strategies. Okay, so with that, really, thank you very much.